So oil demand already in the first quarter of this year was stronger than expected due to colder weather in the US and elsewhere and higher industrial activities in several countries. We are expecting a very strong rebound in the second half of the year as vaccine programs gets underway, economic growth accelerates, also fueled by big investment stimulus packages launched in the US and elsewhere, and a return to mobility as restrictions are eased. I have to stress, though, that the outlook is fragile. We're seeing new cases in many parts of the world and renewed restrictions, but we're hopeful that by the second half of the year that life will start to return to normal. But as you said, we're only recovering about 60% of the volumes lost last year. A lot of the lag will be on jet fuel, on the aviation sectors, where we think that the recovery will take longer to return to pre-COVID levels.
Do you actually ever see demand returning back fully to 2019 levels, or are we entering into a new normal? So we're entering into a new normal. A lot of the effects, the lingering effect from the COVID pandemic, we think will have lasting impacts into the medium term beyond 2021 and coming years. That said, we do see, as we noted in our oil market report outlook to 2026 that was also released today, we're expecting oil demand to return to 2019 levels by 2023. And in the absence of stronger policy to reduce the demand for oil demand will grow every year from now to 2026. Of course, we're noting renewed, very ambitious targets set for climate targets to 2030, 2050, but the absence of direct policies to reduce the oil demand, we're not seeing this having oil demand peak in the next 5 years. Well, you mentioned a little earlier that still the outlook at this point is fragile. There are plenty of still potential downside risks. I want to ask you how much the demand outlook for Europe is being factored in, and especially in light of the developments of the last couple of days with some news over some countries suspending temporarily the use of the AstraZeneca jab. Economists are saying that this could slow down the overall European economic recovery. How is that being factored into the demand outlook for oil here?
Well, we're taking this into account, of course, but we are seeing progress made across the globe for vaccinations. Progress is faster in some countries like the US and the UK, whereas in continental Europe, it's taking a bit longer. But this is factored into our forecast. It does hinge on a successful vaccination campaigns throughout 2021 and 2022 and a gradual return to normal.
Let's turn to the supply side of things. How much would you say are the OPEC plus cuts putting a support and providing a support level to the overall price range of where oil is trading right now? And also, just to add to that, when do you envisage OPEC plus supply returning back to normal?
Yes, thank you. No, of course, oil prices continue to increase during February and early March. A lot of this came from the OPEC Plus decision to roll over production cuts into April. A voluntary reduction of 1 million barrels a day from Saudi Arabia was also extended into April, and the announcement that this will only be phased in gradually. Of course, production shut-ins in the US in February due to the cold weather also played a part, so that global inventories continue to decline, and with a quite healthy outlook for oil demand in the second half of the year. So when we expect to see OPEC Plus production returning to normal, I think it will be a gradual return. As we note in our report, in February, the OPEC Plus group was sitting about 9 million barrels a day of spare capacity. This is along with inventories. We think that this will continue to be drawn down as oil demand recovers. But as the recovery does take years to return to pre-COVID levels, it might extend into the next several years.